Hello there, and welcome to a introduction to the session pivots package. First, I'll talk a little bit about how these support resistance levels came to be, some background info to put this into context, and then we'll move on to show different ways to use them. This picture here is probably taken from the days of Jesse Livermore. If you haven't already, I definitely recommend looking into him. One of the absolute classics in the world of trading is based on him, Reminiscences of a Stock Operator by Edwin Lefebvre. Some very good observations about trading and the market, even though from a different time area. A lot of the things that you can read about there hold true today. So back in the day here, trading session referred to the floor session, where traders and brokers would meet in the pit and where the physical presence of buyers and sellers would influence the prices. And the pivots, or the pivot levels, were used by floor traders to establish market value and key support resistance levels using the high, low, and the close from the prior session. So the main pivot, the PP here, is found by adding the high, yesterday's low, and yesterday's close together and dividing it by 3. That is then this value here, the main pivot. And with a few additional formulas accounting for the volatility of last session, you then find support and resistance levels above and below the main pivot. I'm not going to go into the exact formulas here. You can look that up if you're interested. The main takeaway is that the prior trading range is the basis for these levels. The first support and resistance levels are asymmetrical. You see here, this is closer to the pivot than the first support level. For now, just remember that yesterday's trading range is the basis for these levels. The distance here between R1 and S1 equals yesterday's trading range. It's the same. This distance here equals the distance between first support and first resistance. And if the market is trading between R1 and S1, the market is said to be range bound. And in those scenarios, you can use S1 here to look for long setups. And once you touch on R1, you'd be looking for a short setup. As for the second support level here, the distance from the main pivot to the second support level also equals yesterday's trading range, and equally the distance from the main pivot to the second resistance level, which is just a little bit outside the screenshot here, equaling the trading range of yesterday. So that's just a very brief introduction to the main pivot here, how that's found, and the supports and resistance levels. We're going to talk a little bit about sessions now, because that's an important distinction to make when you're talking about session pivots. So distinguish between the full session and the regular session. The regular session, of course, starts at the regular open, ending at the regular close, whereas the full session also takes the evening and the overnight sessions into account. So you can ask yourself, well, for the S&P, for example, is it important to know where that traded during the Asian and European sessions? Well, yes, because the major future markets are traded around the clock now, and so the highs and the lows of the night session have important price levels that will work as reference points during the US regular session, and you should be able to access these price points on your chart. Here we have the same pivot levels that we saw before, based on the full session low and the full session high. For some instruments, it will make more sense to use the high and the low levels of the regular session when defining these pivot levels. That's especially true if you're trading markets dominated by local traders, in particular for stocks, bonds, and also certain commodity futures. And so if you're referencing the high, low, and the close from the regular session, you will see different support and resistance levels here. The formula itself is still the same, but the input is taken from the regular session, and we see the regular session high was here, not back here. And so these support and resistance levels adjust accordingly. We see a nice touch here of the second support level following the regular open. As I said, depending on the instruments that you trade, you'll want to review whether to set your pivot levels based on the full session or the regular session high, low, and close. So this is a 60-minute chart of the ES with the weekly pivots calculated from the prior week's high, low, and close. Again, you may choose between the high and low levels from the full sessions or the regular sessions. It's also possible to create pivot levels here using custom hours. One thing we haven't talked about here is the pivot range. So these levels that are to the up and down side of the main pivot here was introduced by Mark Fisher, who was a floor trader and who wrote a book called The Logical Trader, specifically used pivots in connection with opening range breakouts. So that might be something worth looking into. The pivot range itself is comprised here by the main pivot, the central pivot, and the directional pivot. So main pivot PP, central pivot CP, and directional pivot DP. Central pivot is simply the high and the low divided by 2, so the mid-range of yesterday's price action. And the directional pivot is taking the distance here from the main pivot and the central pivot, wrapping it in the direction of the weekly close in this case. So here we see the weekly close was near the weekly low, and so we get a red pivot range here indicating a bearish bias from the prior week here. Then we have also here added mid-pivot levels. They are exactly what they sound like. They're midpoints between the regular pivots and particularly useful on higher time frame pivot charts. So a weekly chart like this or a monthly pivot chart, because otherwise these levels are quite far apart. And as you see here, there is some reaction to the mid-pivot level here, or maybe it's the prior week high that is reacting to here, but we also see some reaction here and here, as well as here. So for higher time frame pivot charts, weekly or monthly, you might want to add those mid pivot levels, and then pivot projection. This will give you a heads up on where the next session pivot levels will be. So the projection starts towards the end of the session for the weekly. It's set by default to start on Thursday, when the high and the low of the session is less likely to change for the remainder of the session. And so that's useful to identify potential reversal setups for the start of the next week or the start of the next day. As I said, in a range-bound market, if you're coming in from below, meeting one of these resistance levels, you're looking to exit a long position or evaluate a short setup. And coming in from above, good place to exit a short position or look for potential long setups. If you see the market breaking out of a ranging or sideways scenario, previous resistance levels will become support. So when a level is broken, trading setup can be identified by retracements coming back to previous support or resistance. And these setups are attractive because traders who got trapped short in this situation are anchored at this level and will try to get out at break even. So you can expect demand from these positions to help form support. Included in our session pivots package are also the monthly and end monthly pivots. We also have the Jackson zones that we'll have a look at coming up here, and the end day rolling pivots. All right, so that's the general overview here. I think now we'll go into the charts and have a look at the dialog box, the options here. So here we have 60-minute charts with weekly pivots. I mentioned I wanted to go over the symmetrical or asymmetrical levels are defined here. So you see here in this case, the first support level is much closer to the pivot than the first resistance level. And basically the way these asymmetrical levels are defined is by taking the distance from last week's high here to the main pivot, and then you wrap that around and you find the first resistance level here. And if you do the same here, taking the distance from the low to the main pivot, then you will arrive at the first resistance level. So that is the asymmetry here. These two levels together, of course, equals the entire range. So we can just verify that here. And you see here the distance between the first support and resistance level equals last week's trading range. And likewise, the distance from the main pivot to resistance level or the second support level equals last week's trading range. We'll now have a look at the Jackson zones, because here we see the first support and resistance levels are symmetrical. Basically, we can do the same here, looking at the range of last week. And here we see that if you divide this in two, you will arrive at the first support and resistance levels. So we can just create two sized boxes next to one another just to show how this is calculated. A lot of times these visual representations makes it easier for us to understand how these levels are created. Most of us are visually oriented, so I hope that most of you will appreciate this. Okay, so here we have now the distance from the main pivot to the first support level, so 50% of yesterday's range, and the same here for the first resistance level. And if we're looking at the second support and second resistance, it's the same as with the regular pivot levels. The entire trading range from the last session, from the last week, will get you the second resistance or second support level. And here in extension of these resistance and support levels, we have the resistance bands, and those are Fibonacci extensions from the main pivot. So the first resistance band is the 61.8 extension, and the second extension is the 132.2 extension, and the same to the downside. So minus 61.8 and minus 132.2. Okay, so in the dialog box, I think the most important setting here is to define whether you're using extended trading hours, the full session, or the regular trading hours. You can also define custom hours or have them defined from the daily bars. Input data, if you use daily data, you will not be able to call that in automated strategies. So this is why we have by default set this to intraday data. And yeah, I recommend using just intraday data. The difference is not significant between the settlement price and the intraday data for most cases. So that will give you the correct pivot levels. Here we have the projection start, which we see here. If you want to use these projections and also have a good overview over the plots here, you need to increase your margin here. You see I've set it here to 300 so that you have enough space here on your hard right edge to see what these plots actually tell you, and if you have the projection activated so that you will be able to have a good overview of that. Another feature here is to turn off these prior weeks, and by doing so we will only see the pivot levels for the current session. It cleans up the chart quite a bit, makes it easier to read. Okay, so that is what I had prepared for today. If you have any questions for me, feel free to reach out. My email is info@lizardindicators.com. You can also drop me a line at the contact form over at Lizard Indicators. Looking forward to hearing from you. Until then, take care and bye-bye.